What is the most valuable currency in the world? You might be thinking about the mighty dollar, the resilient yen, or perhaps the solid gold. But what if we told you that there's a form of currency that transcends all these? A currency that underpins every business deal, every handshake, every promise made. This currency is trust. Trust, in its essence, is a form of currency. It lubricates the machinery of our daily transactions. It's the invisible thread that binds buyer and seller, lender and borrower. When you buy a loaf of bread, you trust that the baker has used quality ingredients. When you deposit money in a bank, you trust that the bank will safeguard your funds. Trust, in this sense, is the silent partner in every transaction. But what if you could be in a position where you had to trust less? Would that not put you at an advantage? Indeed, it would. The person who has to exercise the least trust is the person in the better position in the transaction. This is where the concept of leverage comes into play. If you can leverage trust, you can navigate the world of transactions with greater ease and assurance. But how does one leverage trust? It's a delicate dance, a balancing act. It requires honesty, transparency, and integrity. It requires you to consistently deliver on your promises, to uphold your end of the bargain. It requires you to be as good as your last transaction. This is the essence of trust as a currency. It's not something you can hold in your hand or stash in your wallet. It's something you earn, bit by bit, transaction by transaction. So next time you find yourself in a transaction, remember this: the most valuable currency in the world isn't something you can touch or see. It's trust. And remember, the person who has to exercise the least trust comes out better in a transaction. Now, what if we could eradicate the need for trust, like in the case of Bitcoin? Bitcoin, the world's first decentralized cryptocurrency, operates on a trustless principle. This means you don't need to trust a bank, a government, or any third-party entity to validate your transactions. The trust is placed in the technology itself, the blockchain. Let's delve into this trustless nature of Bitcoin. Imagine a world where currencies can't be debased. Traditional currencies like gold can be manipulated. Gold can be mixed with other metals, its value can be debased. But Bitcoin? It's immune to such manipulation. Each Bitcoin is unique, its value is intrinsic and can't be debased. This is the power of a trustless system. No one can tamper with its value. But how about inflation? You know, when a government decides to print more of its currency, causing the existing money to lose value. Well, Bitcoin is free from that too. The total supply of Bitcoin is capped at 21 million. No more can be created. This scarcity is programmed into its code, making Bitcoin free from the inflationary pressures that traditional currencies face. Now, you might be wondering, why does this matter? Well, it matters because trust, or the lack of it, affects the value of money. When trust in a currency diminishes, its value decreases. Bitcoin, being trustless, eliminates this issue. Its value is not dependent on faith in a central authority, but on the robustness of its technology. Bitcoin presents an opportunity akin to when the US dollar went off the gold standard in 1971. Back then, those who understood the difference between money and currency capitalized on the opportunity. They banked in assets like gold, which appreciated in value over time. Today, Bitcoin offers a similar opportunity. It's not just a digital currency, it's a store of value, a hedge against inflation, and a testament to the power of a trustless system. And just like in the 70s, those who understand this difference and seize the opportunity stand to benefit the most. To capitalize on such opportunities, you need to understand the difference between money and currency. In the grand scheme of finance, money and currency often get used interchangeably. But here's the deal, they're not the same. Money, in its purest form, is a store of value, a measure of wealth. It's an asset that appreciates over time. Think gold, think real estate. These are tangible assets that hold their value, or even better, increase in value over time. Currency, on the other hand, is a medium of exchange. It's what we use to buy and sell goods or services. But here's the kicker. Currency doesn't hold its value over time. In fact, it loses value due to inflation. It's like a melting ice cube, gradually shrinking in your financial glass. Now, let's talk about banking and assets. Picture this. Instead of stashing away paper currency that's doomed to lose its value, you invest in assets. You buy gold, you buy real estate, you buy things that are going to appreciate in value over the years. This is banking in assets, and it's how the savvy ones grow their wealth. But why do they do this? Because they understand the game. They understand that the key is not just to accumulate wealth, but to preserve and grow it. They understand the difference between money and currency. Now, let's put this into perspective. If you took $1 million in 1971 and invested it all in gold, do you know how much that would be worth today? A lot more than $1 million, I can tell you that. And if you had kept that $1 million in cash, well, let's just say you'd be able to buy a lot less stuff today than you could in 1971. What's the moral of the story? Understanding the difference between money and currency is crucial in the world of finance. It's the key to capitalizing on opportunities and preserving your wealth. If you don't understand finances, value, price versus value, quality and scarcity, then you don't understand money. Now let's delve into the blockchain network, the backbone of Bitcoin. This is where the magic happens, where trust is replaced with transparency and reliability. But what exactly is a blockchain? Picture it as an open ledger, but not just any ledger. This one is decentralized, spread across thousands of computers worldwide, making it near impossible to alter or hack. Each transaction made with Bitcoin is recorded on this blockchain, forming a block. This block is then linked to the one before it, and the one before that, and so on, forming a chain, hence the term blockchain. This chain of blocks is a permanent, unalterable record of every transaction ever made. Once a block is added to the chain, it's there for eternity. But here's the kicker. The blockchain isn't just a record keeper, it's a problem solver. It solved the issue of digital scarcity. In the physical world, we understand scarcity. Gold is scarce, diamonds are scarce. But in the digital world, where copying and pasting are as easy as a click, how do you create scarcity? How do you ensure that a digital Bitcoin, once spent, can't be copied and spent again? Enter the blockchain. With its open, decentralized ledger, the blockchain verifies each transaction. It ensures that each Bitcoin spent is a unique entity, not a copy. This gives Bitcoin its scarcity, its value. It's like having an automated, incorruptible watchdog keeping an eye on every transaction, making sure everything is above board. And this is why the blockchain is so revolutionary. It's not just about Bitcoin. It's about the potential to create trust in a trustless environment. It's about transparency, security, and the power of decentralization. It's about a new way of doing things, where trust is replaced with verification and where power is distributed, not concentrated. So the next time you hear about Bitcoin, remember the blockchain. It's the technology that makes it all possible. And remember, whatever transaction happens on the blockchain is recorded forever. Let's look into the future. In 100 years, the last Bitcoin will be mined. It's a notion that might seem distant, but it holds profound implications for the value of Bitcoin and the blockchain network. The value of Bitcoin, in essence, is determined by the value that the blockchain network can absorb. The blockchain network operates like a black hole in space, sucking up value from various transactions and interactions. This absorption of value is continuous and relentless, painting a picture of a future where Bitcoin could potentially hold immense value. But how do we quantify this value? This is where the concept of market capitalization, or market cap, comes into play. Market cap is the total value of all the money in a particular network. In the case of Bitcoin, this is currently $500 billion. Now, that might sound like a lot, but let's put it in perspective. The global stock market is valued at around $94 trillion. So Bitcoin's market cap is but a drop in this vast financial ocean. Yet, the potential for growth is staggering. As the blockchain network continues to absorb value, the market cap of Bitcoin will likely increase, pushing up the value of individual Bitcoins. The future of Bitcoin, therefore, is not just about the last Bitcoin being mined, but about the continuous absorption of value by the blockchain network. So, what does this mean for you? Simply put, being ahead of time and taking action is the key in this network. The pioneers of Bitcoin didn't sit around analyzing, they took action. They saw the potential of Bitcoin and the blockchain network and capitalized on it. Don't get analysis paralysis. The future of Bitcoin and blockchain is bright, and it's waiting for those who are willing to take the leap. Like, subscribe, and share. Until next time.